Welcome to RetireCoast, where we discuss all things retirement, life on the Mississippi Gulf Coast, and your financial welfare. Bill Anderson, your host, is a serial entrepreneur having created many successful businesses and holds a real estate broker's license, speaks about personal experiences with each topic. Listen, learn, and improve the quality of your life.
Thank you for visiting RetireCoast podcast once again. I'm going to talk today about something that affects everyone in the United States and, of course, in other countries too. But we're going to talk about insurance. That's something most people dread. None of us can actually see any direct benefit from paying for insurance. It's not like going down and buying a brand new car and getting that new car feel, or buying a new item of clothing and putting it on and feeling good about it. It's just one of those costs of living that we have to deal with. And I'm not going to forget about those of you who are seniors and are considering the possibility of retiring and how much money you need for retirement. Kind of keep this in mind in the back of your head there, and I will hit on this as we go through this process. I've broken this up into two sections. One of them is on vehicle insurance. Nearly everyone is involved in vehicle insurance. Even if you don't drive, someone's driving you around. And even taxis and Ubers and all those people, they're paying insurance rates that are going up, and it's going to affect you. So literally, it affects everyone. Between 2019 and 2024, premiums have gone up 70% nationwide. Now, insurance markets are different from state to state. They use lots of algorithms to determine how to charge you, and that includes your age, your driving record, your credit history, and a whole host of other things. And some of the crime rates in your area will affect your insurance as well. So depending on where you live, your insurance rates will be different, but on an average, 70% increase. Now think about that. Even with the terrible economy that we've had during the last 4 years, with a 20-25% cumulative increase in the cost of living, we still haven't reached 70%. So insurance rates have just skyrocketed above almost everything else. So let's talk about 2024, where insurance increased 22%, with some states increasing by 50%. And that's just in 1 year, which we're just finishing up. So just in 2024, just let me reiterate, 22%, which would indicate to me that if we were looking back at the 5 years, it went up 70%. The rate is actually going up faster now than it was going up in 2019. So let me tell you about the things that cause insurance rates to go up. Increased repair costs have surged about 38% in the last 5 years. Let me tell you what part of that is. There is a severe, very severe shortage of technicians to work on your car, truck, motorcycle, motorhome. And what happens is that the dealers and the shops have to pay more to hire those few people that are there. It seems that most of the younger folks today don't want to work with their hands. Their parents are pushing them to go to college, whether it's a good thing for them or not. And a large portion of people that go to college never finish, they don't graduate, and even many of those that do end up with jobs that are not satisfying to them and don't earn enough money to really do well with. And then compare that to an auto mechanic now who earns typically over $100,000, depending on your market, maybe $150,000 in some markets. And that's a very stable job. It's a 5-day-a-week job. You go home at the end of your shift and you leave all the problems behind. Unlike many people that go to college, get a job as a manager someplace, working maybe at a retail chain, and they're working around the clock for the pittance that they earn compared to how much a person that works on your car earns. So clearly there is a problem here that parents need to address, society needs to address, because we need these technicians. Otherwise, our costs are going to go higher and higher. But worse than that, how are we going to get the cars fixed if we don't have people out there to do it? And of course, the insurance companies having to pay the bills for all these car repairs, they're paying higher and higher bills, which means that they're pushing all of that back on us. So I'm sorry for jumping off a little bit on that tangent, but that bothers me a great deal. And I hope that we get a lot more people going into the trades. We need plumbers, electricians, other individuals like that, because insurance, as we get into the household side, after we talk about the automotive, we're going to discuss what it means for all of the other trades as well. Anyway, the next thing is that there's higher claim frequencies. Post-pandemic driving patterns have led to more accidents, and of course that means that their loss ratios are out of whack, and the insurance companies have to raise their rates for that. Litigation and fraud, that's a big problem, and it is a societal problem. You can see that in a lot of the news reports over the last few years, where you have a lot of people who think that they have a right to something. I will bring to your mind recently the executive that was killed in New York, and there are a lot of people that say that maybe he deserved it because he was a bad person raising rates for health insurance. Now, that's the kind of thinking we have out there, where people will, instead of years ago, not make a claim because it was fraudulent, they'll make it now. So there's more of those claims, and then we're paying the bill for those claims. Let's take a deeper dive into automotive insurance. By the time you finish listening to this podcast, I want you to thoroughly understand not only that insurance rates have gone up, but they are going up, and that there are reasons for them to go up. And I want you to understand how they track your records and how long they track your records. So let's get into that section right now. There is a system out there called Comprehensive Loss Underwriting Exchange, or CLUE. This is a gigantic database of insurance claims for auto and property insurance. It's used by the insurance companies to assess risk and determine the premiums. So what they retain are accident and claims history for both vehicles and property. So remember this as we get into the property discussion. The retention period remains at 7 years. I can't believe that. Most of us probably wouldn't. It's as if what happens at the end of 7 years, it just drops off. Could they possibly keep it a little bit longer than that? I don't know. I just don't believe it, but they will keep it for at least 7 years. And you can get access to that if you want to ask for a CLUE report by going to the website and finding out how to get your report. So the state DMV records are also kept there. They check for traffic violations and accident reports and points accumulated for infractions. Now, this information is usually kept for 3 to 10 years. The accident data is supposed to be kept for 3 to 5 years if it's a small accident. It's not a big deal. It's a minor accident. If it's a major accident, then they can keep it out there for 5 years or longer, and as I mentioned, 7 years. Now, the states regulate the insurance industry, so what I'm telling you now may vary from state to state. So I'll explain to you what Mississippi does require. Mississippi allows the tracking for 3 to 5 years, and there may be some exceptions to that. After that, they can't use the records supposedly to have an impact on your insurance premium. Other states may allow them to keep it for a longer period of time. Now let's talk a little bit about a way that you can mitigate or possibly avoid having to report any information to your insurance company or making any claim for an accident. Now, in almost all states, but you have to check to make sure, if you have an accident on private property, which would be, say, a parking lot, from a shopping center, then you are not required to report that accident to local law enforcement authorities. And a lot of people do not, and that's what I'm going to get into now, that if you are in a fender bender there and you think the amount's relatively minor, then there's a good possibility you can settle that by offering to pay the person to repair the car outside of insurance. And so let's get into what you need to do when you've decided that's the course you want to take. First, there's no crime involved, and neither party is suspected of a DUI, and there is sufficient damage to require the car, for example, or vehicle, to be repaired. The property owner will be involved if there's damage to a building or a fence or a parked car or something else. But if it's just your vehicle and another vehicle and you can reach the other person, then you need to do things like take pictures of the scene, damages, any involved vehicles, get information from anyone who witnessed the scene. Be sure that you get a picture of the license plate of the vehicle, and then you write down a detailed description of the events leading to the accident. Be sure to notify law enforcement if there are any injuries of any kind, if there are disputes about fault or damage costs, and if the damage exceeds $500 if it's on public property. That is the twist. Most states have a damage limit. If it's on public property, you have to report it. If it's over so much, in Mississippi it's $500. It may be more in California. It may be more or less in some other state. So if you don't report a fender bender that happens on a public street, you may be in violation of the law for not reporting it. Now, often the cities, counties, local law enforcement will not respond for a small fender bender as long as it's not blocking traffic, and that's explained in the telephone call. So don't expect them to come out and write up a report. And what I'm suggesting to you is that you can save yourself a lot of pain and anguish if you are in a position to pay for the repair of the other vehicle, as long as these other conditions I mentioned already exist. The pros, of course, would include avoiding insurance premium increases. That is, if you took care of this on your own, there would be no impact on your claims history, of course, because it hasn't been reported, and there would be faster resolution. You can contact a body shop, for example, and you can offer to pay the body shop directly, as long as everyone's cooperating in this. Now, that's just happened to me before. I've only been involved in a couple little accidents in the many years I've been driving, and in one case I paid for the repairs, and it did not hit my report. In another case, which happened not long ago, I was dumb, didn't follow my own advice, which is one reason I'm doing this podcast, and I was in a parking lot. I was parked next to a car that was very close to my truck. My truck is fairly high, and the car was not parked properly. It was sticking out into the lane, actually. Didn't park all the way up in the front. So when I went to turn, I scraped the front of the car, didn't do any damage to the metal whatsoever, scraped the headlight lens, and I decided I'll just turn it over to the insurance company. I don't know what I was thinking at the time, and I did. So the insurance company paid about $3,500 for that, and my rate went up $2,000 when it was renewed several months later. Fortunately, they didn't cancel my insurance, but just because of that small little fender bender there, if I had contacted the owner and we made arrangements, they would have probably agreed to have me pay for it, and we wouldn't have needed to contact the insurance company. So I'm telling you from personal experience, it's probably going to cost me about $6,000 before my insurance actually goes back down again over a $3,500 claim. And even that $3,500 is probably too much. I know someone that owns a body shop. He's done some painting work for me and some other work over the years, and I'm sure that he probably would have taken care of that for maybe around $1,500, $1,800. So it would have cost me less. And since it happened in a parking lot, there was no requirement to report it to any police officer. I left a note on that car. I wasn't able to talk to the person that was there, and they called me up, and they were very friendly about it. So I should have taken that opportunity, but I didn't. And I'm just letting you know now, if you get the opportunity to save yourself some money. Well, now that we've covered all of the negative things about auto insurance, and you know that you're going to keep paying more and more, let's talk about what you can do to help keep your rate down. And it's not a lot of things, it's quite a few in number, but you may not be able to save a huge amount of money. And even if you do save it 1 year, it's likely to go up another time. But it's worth going through this list to explain to you what you might be able to do. One of them is to compare quotes. That should be obvious. You may have been with the same people for years and years and years, but it doesn't mean that you should stay with them. You can stay with the same broker, and the broker can find another insurance company that may be offering something better for you, in which case you could save at least the first year. That doesn't keep the rate from going up in future years. I'm sorry to give you this bad information, but it's practical. Bundle the policies. Now, this does work. I've done this before, and probably many of you I'm talking to have done too, by bringing your homeowners or your renters insurance or your RV insurance, but just putting these insurance policies with the same insurance company that will give you reductions on all of the policies. And I have saved some pretty good amounts over the years, particularly on my homeowners policy. One time I bundled it with my auto policy. You can raise your deductible. Now, that's a smart thing to do. I think too many of you are driving around out there with $250 or $500 deductibles. Now, if your income is low, on the low side, you may want that deductible. But if you can afford it, then work on a higher deductible. Go to $1,000, go to $2,000. If you share that cost with them, there's some significant savings, particularly if you're a safe driver and you have a good driving record. So consider raising the deductible. And by the way, you can do multiple things here as we get into some more items. So look for the different discounts. Now, there's good driver discounts for accident-free records. There's low mileage discounts if you drive fewer miles annually. There are good student discounts. There's safety features discounts. Now, there aren't too many safety features in cars anymore that aren't already preloaded by the factory, but that's a possibility. And then military or membership discounts. Some organizations give discounts. Then you want to look at reducing the coverage on older cars. If you have an older car it's just an extra car in case your primary car needs work on it or something. When I was living in Pennsylvania, we used to call these winter beaters. You drive them during the wintertime, put your nice car in the garage. Drop the collision and comprehensive insurance, which means that if it's in an accident, the insurance company is likely not to repair it anyway. They're going to say, we're going to, junk this out. We're going to give you $3,000 for this car. If you drop the collision and comprehensive insurance and cover that yourself, scrap the car, get paid for it, and go get another one, or maybe you don't need it any longer, that will save you some money. Drive safely, of course. Well, that should be a no-brainer, but, for some of you, it's, that like to speed or take extra risks going through that yellow light just because you saw that movie. And if you drive safely, you're going to get a safe driver discount. Opt for usage-based or pay-as-you-go insurance is another one. And that's kind of an odd one, but I brought that out there anyway because it may work for some of you. Improve your credit score. In some states, the insurers consider credit scores when determining the rates. Actually, it's in many, many states, if not most states, and that credit score is very important. If you have a low score, you're going to pay more for your insurance. And the thing is, you won't know that you're paying more. If your score is less than about 720, 730, you're going to pay more than someone who has a 720 or a 730 score, and you won't know the difference. Insurance companies don't put a chart out there saying, here, by this credit score, we're going to charge this rate. You'll never see it. But trust me, All of the facts are out there for you to be able to read, and other places that the insurance companies do look at your credit score when they rate your premium. So keep your credit score up. That's one of the key things a lot of people don't pay attention to. The score goes up and down. During the year, they think, well, I'm not going to buy a car. I'm not going to buy a house. So I don't care if the score goes down a little bit because I went out and charged lots on my card. But you don't know when the insurance company is going to check your credit just as they're coming up for renewal. It could be 30 days out, could be 45 days out, for example. Review your coverage regularly. Check your annual policy to make sure you're not paying for anything you don't need on that policy. Now, sometimes insurance companies will give you basically a bundle thing. It'll include this and this and this and this and this item, which you need. For example, comprehensive, and you need medical for yourself, maybe, and some medical for someone else that you hit, maybe. And you look at it and say, wait a minute, I don't need medical for myself. I'm fully insured. I have health insurance. Well, you might want to drop that off. And there may be some other things on there that you don't need that just find their way on there over the years. Consider taking a defensive driving course, particularly if you're a senior. Seniors are going to pay more for insurance than people in their 40s or 50s, for example. It's a fact. Seniors have more fender benders and issues, and they are, without that defensive driving course, insurance companies are, at a loss of how they can keep your rate down. So take that defensive driving course and prove that you're a good driver, and that's a good way to get your premium down. In some cases, the cost of that defensive driving course may be paid for in just 1 year's rate adjustment. Adjust your payment options. I always say pay your premiums in full. Do not pay on monthly installments because your insurance rate is already high enough. You really want to pay on monthly installments and pay interest on that insurance? So if you can, pay it at one time. For some of you, that may be hard. It may be several $1,000s, but save the money up every month and put it someplace so that when your insurance comes due, you can pay it. It maybe that insurance is charged on your credit card, and then you make that credit card payment as soon as that bill comes due. And then for some, they require automatic payments for a possible discount. And that won't necessarily be true on an annual payment, but it could be. I have mine set up that way, even though it's an annual payment, so they can just grab it the next year. Now they'll send you a notice and say, hey, here is your rate increase for the next year. Notice I didn't say here's your rate. I said rate increase. And then you have the opportunity to go out and find something else. If you don't, then it's automatically going to be charged to your card, and they will probably have given you a discount for that. And then the last thing I have here, for those of you who live in high crime areas where the insurance rates are affected by theft and damage to vehicles, you may want to consider moving to a safer area. Now, that sounds maybe like I don't know all your problems and issues and how much difficulty it would be, but saving insurance rate money is probably only one of the benefits that moving to another area will give you. Maybe it'll cost less money to live in another area. So if you're thinking about a reason to move, to go to a lower crime area, possibly insurance is one of those reasons. Well, that's pretty much a wrap for insurance on vehicles. And that would, of course, include any type of vehicle that you have. We're going to talk now about property insurance. And just as with vehicle insurance, nearly everyone pays one way or the other. You're either going to pay directly because you own a car, or you're going to pay someone's policy cost when you hire them to drive you. The same thing with a property. If you're renting, for example, the owner of the property will have to pay an ever-increasing cost for insurance, and they're going to want to pass that along to you in the rate that you pay to live in that property. Your lease payment, for example, or your rent payment, you can expect to go up. So that's one of the reasons I brought this up in this forum, is because it affects everyone. So let's start talking about the CLUE report, which I mentioned earlier. And that clue report, which is out there for everybody to go out and check, go to their consumer portal at Clue. And that means that all of the information that's ever occurred on claims for a physical property, which is a house, condo, or any other living quarters, if there's anything that's ever happened there, it's been a flood, a hurricane, a fire, it's been reported to the insurance company, it's going to be on file, and that stays there for seemingly ever. And it doesn't make any difference whether it was your house or not. So you may have just purchased a nice house that was rehabbed. That house may have been flooded a few years ago, and now that flood and notification is on your house, and it's likely when you acquired insurance for your house that you paid a higher rate for that house than a house that didn't have any records on it at all, but yet you didn't know it. So because I already discussed the idea of not reporting some incidents with vehicles, let's just start out with that on home. Now, let's say you had a small kitchen fire and it blackened the walls a little bit, maybe did a little bit of damage to the top of the stove, and you think, well, I'm just going to call the insurance company and they'll take care of it. Stop in your tracks. Before you call the insurance company, remember, the same situation occurs with houses as it does with a car. If you report and they pay, then it's going to cost you more. But wait a minute. What if you report and you decide, no, I don't want you to send me a check, I'll take care of it? Too late. You've already reported it. It doesn't make any difference what they spent after that. Do not call and report something that happened at your house to an insurance company unless you fully expect them to pay the bill. Because if they know about it and you decided to back down on it and not do it, you had a thought, what happens if this actually goes through? It's going to cost me money. Too late. If they know about it, it's going to cost you money. They collect all of this information from different sources, from the police and others. And if you've reported it somewhere, it's going to show up on their record, and that's going to cost you money. So do not call them if you fully intend to take care of the repairs on your own. And I strongly suggest that you do that. You take care of those repairs on your own. Your insurance may be $1,000 a year. It may be $5,000 a year. Whatever you're paying for your homeowner's part, the part of the insurance that might cover that area that's been damaged. But if that rate goes up, 30, 40, 50%, that's a lot of money to play with, which means that you could, in many cases, afford to make those repairs on your own and still save money on insurance over the next few years as they continue to raise the rate for you. So, for example, with the kitchen, if you decide to paint it yourself, paint over the blackening stuff on the ceiling and everything, and replace the part that was damaged on your stove, then fine, your house is repaired, and it probably cost you a few $100s as opposed to thousands of dollars. So before you make that report, be sure that you can't fix that problem on your own, hiring a contractor and paying that contractor to do it so you don't have yet another record on your house and give the insurance companies a reason to raise your rate again. Now let's talk a few numbers. Your property insurance, or homeowners insurance as it's called, may have gone up as much as 33.2%, which happens to be the average increase over the last 5 years. Again, that's way above inflation, just as the automotive insurance is. And according to the insurance industry, natural disasters, there's an increasing frequency of them and the severity too. Of course, the homes cost more to build and that type of thing. Inflation, the rising cost, as I mentioned, of materials, construction, and labor make it more expensive. And then the reinsurance costs, again, for those of you that may not understand, is insurance companies are backed up by other insurance companies and people with money. So the cost to have those backups will be increased as well. Now, some places For example, in Colorado, they've experienced a 57.9% increase in insurance rates, while Arizona and Utah have seen 52 and 51%. If you live on the beach, for example, anywhere from Texas surrounding all the way around the Gulf up to Maine, you will have probably another type of insurance you have to have, and that's wind and hail policies. And that will go up. That's gone up significantly. As a matter of fact, the wind and hail coverage has gone up more than most of the other insurance components. And then based on all of the different types of claims, 34% of all insurance claims in the last 5 years have been wind and hail coverage. And that's for severe weather, including hurricanes, tornadoes, and hailstorms. And then, they will damage the roof, break windows, knock down trees, and other similar issues. The water damage and freezing was 29%. That's burst pipes, water intrusion, appliance malfunctions, that kind of thing. More in freezing areas, obviously. But I live in Mississippi, and I actually had a water pipe burst because it got down below 32, believe it or not, just right by the beach. And I had water flowing all over the place, so I had to have somebody come in and fix it. I didn't turn that over to the insurance company. Unlike with my vehicle, it didn't even occur to me to call the insurance company to fix a broken pipe. I took care of it, and the water company gave me a credit for the actual water loss, so I was fine. I had to pay a little bit of money for it, but it was taken care of, and my insurance rate didn't go up. 25% of all claims were fire and lightning. And that's electrical fires or lightning strikes, and then kitchen fires. Lightning strikes are very interesting because they can damage a lot of your electronic items in the house. Even if the house was not struck by lightning, it could have been struck down the street someplace, and it wasn't struck by lightning, and yet it was close enough. It traveled right under your house and got some things shorted out. I've been to houses where that happened, and they can actually tell which way the electrical signal came in and what it damaged and where it went back out. So theft and burglary are 6% of all the claims. Liability claims are 2%, slip and fall kinds of things, and then there's other claims, fallen trees, power surges, and mold damage. Mold damage isn't as much as it used to be, but a lot of attorneys got involved in mold damage in the past, and that seems to have been pretty much corrected, especially with newer homes, and a lot of the attention that's been given to it as well. So what you can do on your house policy is to prevent it from going up any further is regular maintenance. Inspect that roof. A roof is such a major thing. They're supposed to last 20, 25 years. If it's a shingle roof, for example, if it's a metal roof, it's maybe 50 years, and there's other kinds of roofs too, tile roofs. But you inspect the roof, make sure that the gutters are clean and that you have no roof leaks. Take a look at the ceiling inside your house, go up in the attic if you have one, and make sure that you have sealed any leaks. You have to do this. You have to do this because insurance companies will come around and look at your roof. And if your roof is over 10 years, the clock is ticking on when the insurance company will start to increase your rate. And they won't tell you they're doing that, but they do. They do not like old roofs. So have somebody come out and take a look at it if you don't know enough to do that. Install safety features. They'll give you discounts in some cases for smoke detectors, fire extinguishers, and a security system. Now, a lot of us have security systems, and they aren't necessarily connected to someone sitting at a desk someplace. That's where you're going to have to make a change. You may have one of those great security systems that you install in your house, like a Ring system, but it's not monitored. And if it's not monitored, you're not going to get a discount for it, even though it's a good security system. So consider that. Often I look at that cost and say, well, here's the cost of having the monitored system, and then here's the savings I'm going to get. And the savings doesn't always match up. Usually the monitoring system is going to cost you a little more money, but it depends on where you live. If you live in an area that you should really have a security system, then spend the extra money and get the discount, which will pay for a good portion of it. Surge protectors for electronics. You need to read the article on RetireCoast.com on surge protectors for the entire house. That is really critical. I didn't even know such a thing existed until somebody told me about it. I did some research, and then I wrote a whole blog article about it. But it's fascinating. You can actually protect all of the electronics in the house with one single protector that's wired up just outside by your panel. And it's probably worth every penny, at least I have found it is, to have that on your house, because it will protect all the electronics in the house. Instead of having all these individual surge protectors all over the house protecting electronics, you can have one. Of course, if you still have the others, you keep them. They'll just be, helpful in case there's a really close lightning strike. Now, the whole house surge protector will certainly help, but if it's very close or it strikes the house itself, it may not be enough. But instead, consider that. Read the article about it. Storm preparation, reinforced doors and windows, particularly if you live in areas where there's hurricanes or tornadoes. Remove dead trees or overhanging branches. Now, here's another pet thing for insurance companies. Get those branches off of your roof. You have to do it. If the inspector comes by, they'll usually write it up and they'll give you a couple of weeks, and then you're going to have to find a tree company that has the time to come out there, and you're going to spend hundreds and hundreds and hundreds of dollars having them cut these mature trees that are overhanging your roof. You don't want any tree branches overhanging any part of your roof, because if those rot and fall, they could damage your roof, and that's what the insurance company doesn't want to see. So they'll actually penalize you. They could threaten to cancel your roof insurance, that portion of your insurance, over the roof because you haven't done that. And I've seen that happen, particularly where I'm at, where there's a lot of very mature live oak trees and magnolia trees and other big ones. Liability precautions: keep sidewalks clear of debris, and fence your yard if you own pets. You don't want your pets biting the neighbors. That's a liability issue. Let me talk a little bit about these walkways. Some places the walkways are coming up. In other words, they're supposed to meet, and one side lifts up a little bit, so if somebody's walking down a sidewalk, they can catch their foot on it. You need to deal with that. Some cities will do it for you, but if they consider that your property, which is where I live, the sidewalk is my property. I'm responsible. So if that sidewalk starts to lift because of a tree branch growing under it, I need to fix that, because the last thing I want is somebody claiming that they were injured on my property. So all of these things will help. Now let's talk a little bit about that inspection. Insurance companies will come out and inspect any new homes that they first insure. They'll send somebody out. They'll also send out drones, which can pick up pretty much everything. And you'll be given a checklist of things you need to fix. And they'll give you a reasonable amount of time to do it, but you can't just hang around and not do it. If you fix all those things, it's likely they'll keep you as a customer. If you do not, they will drop you like a hot potato. So you have to do that. Now, they'll come by usually once a year, and they will unobtrusively take a look from the street to see if there's anything that is safety related. What they consider safety related would be, of course, the tree branches, the condition of the roof, any drainage issues on the property. Your property should have already been set up for drainage, but if you change the landscaping and it looks like there's water building up someplace, that's a problem too. So you want to make sure when those inspectors come by or they look at the drone footage of your house, they're just going to go right on by yours and they're going to go to the next one down the street. Well, it's time to go over my list of things that you can do to help reduce, keep your homeowner's insurance costs low. And for those of you that are renting, by the way, you should get renter's insurance, because if you look at your contract with your landlord, you'll probably find that if that place burns down, they're not responsible for anything inside the unit. You need to get renter's insurance to cover anything inside the unit. If that place burns down or there's a hurricane or something else, at least you're covered for all of your furniture and any photos or anything else inside that property. But for those of you that own homes and properties, let's go through a list of things that we can do to help reduce the cost. Shop around for better rates. What you're going to hear now is some reiteration of the things we talked about for automotive insurance is somewhat similar. So other than shopping around for rates, we have bundle the policies. I mentioned that before. Increase your deductible. Again, with the house, it's the same situation. Improve the home security. We talked about that a little bit. Install security systems, smoke detectors, fire extinguishers, deadbolt locks. Insurers provide discounts for homes with safety features. So we're talking about not just something like a fire or a hurricane, but to keep people from breaking into your house too. So anything you can do to improve your home security, the more that you can do and document, the better, and you might be able to get a discount for that. Maintain a good credit score. Same situation. In fact, it applies to so many areas of life, but keep that credit score high. Make your home disaster resistant. Reinforce the roof, install storm shutters, upgrade the plumbing or electrical systems. If you have plumbing items, especially the pipes, and more particularly the plastic pipes that are exposed, the house is lifted up a little bit off the ground and the plastic water pipe, for example, is exposed. So when you get a freeze, it's going to break that pipe. You can go down to any one of the big hardware stores, and you can, or small ones too, and you can buy wrap to go around all those plumbing parts to make sure that they won't freeze. You can even get electrical tape that has wires in it, and you can plug it in and make sure that it's warm. There are a number of steps you can do to make sure that you can avoid those kinds of disasters, and ask your insurer about specific discounts for these things too. Avoid small claims. I mentioned that already. It's so important. Pay for small stuff out of your own pocket and have a high deductible. Ask about discounts available for newer homes or renovated systems. Now, that's important. If you put a new roof on your house, you need to call your insurance agent right away and say, I have a brand new roof on my house. I want a lower rate, and see what they'll do. If you have had no claims for a certain period, and you may be a member in an organization that helps provide some type of a discount too. Review your coverage regularly, just the same thing with automobile. Make sure you're not being charged for something that you shouldn't be. And by the way, I'm going to bring this up because so many people don't understand this. Let's say that your house is worth on the market, and that's the land and everything else, $300,000. And you see your insurance is at $450,000, and you go, oh, it's not $450,000, it's only worth $300,000. Why am I paying so much more? Well, basically the cost to rebuild that house at today's rate for a single property is going to be about $450,000. That's what they put the number at. It's not the dirt, for example. Obviously, you own that, but it's hiring contractors to come out for a single home instead of a lot of homes to rebuild that home, and that's the estimate. Particularly if you want to be walking out of that whole. In other words, not having to put any more money into it. You want the insurance company to cover the entire cost. Be sure that it's insured for enough, and don't try to talk them into reducing that, because when time comes and there's a property claim, if you haven't paid enough for enough coverage, they're going to stop there, and you have to cover the difference. So they know better. They have these charts. They understand the cost of living and materials in your area. So your insurance broker should be able to assign a reasonable number as far as the value or the rebuild value of that house. Then maintain your home. Keep it up. Fix the leaks, trim the trees. Try to prevent costly damages. Flooding, that kind of thing. Install a new roof. I mentioned that already. A new roof. I just put a new roof on 2 of my rental properties at about $5,000 per roof. And, based on values in the area, that actually value of the property increased higher than the cost of putting a roof on, which is entirely possible. And certainly it will have an impact on the insurance rates. Pay annually. Same thing with the automotive insurance. Pay the entire amount every year. You don't want that rate going up in 6 months. Consider usage-based policies where they adjust based on the home usage or vacancy levels. Maybe you only live in the house for 6 months out of the year, for example. There may be a rate for that. Stay loyal or switch. Some companies offer loyalty discounts for long-term customers, but don't hesitate in switching if you can get a better deal someplace else, because their loyalty discount may be, say, $100, and you might be able to save $300 by going someplace else. There's basically no reason to stay with any insurance company. The broker is different. The broker represents multiple insurance companies. You can stay with the same broker, and that broker can find another insurance company. I own some vacation properties, and every year when these things come up, I go to two brokers that I use, and I ask them to give me rates. And they'll change, and I'll change rates nearly every single year because there are discounts for new customers, and that new discount is good for 1 year. Next year, they won't give me a discount, so I'll go to somebody else, and I'll switch almost every year. Join a group or an association. There's professional organizations, homeowners associations, other groups that will help you get a discount. Well, to sum up this entire podcast about insurance, both automotive and homeowners insurance, without a doubt, insurance rates are going in only one direction, and that is up. There was a time not long ago when insurance rates were going down because they had gone up so high anyway, but that's not probably going to happen to us in the near future. There is a labor shortage for both houses and for vehicles, repairs, and building. And as long as that labor shortage exists, we're going to see higher rates until the cost of things drop, which we hope they will. We're going to see higher rates based on inflation as well. So there's a lot of factors out there that are not looking good into the future that will make those rates increase. Now, for those of you who are on a fixed income, this is, or will be on a fixed income, this is one of those things where there are questions asked: how much money do I need to retire? $500,000 or $1 million, for example. And the answer is nobody knows. But one thing is for sure: whatever it costs you to live today, it's going to be a lot more down the road, because these two cost items I mentioned, auto insurance and homeowners insurance, far exceed inflation. If we could even have a crystal ball and understand inflation, and we understood that it went up about 25% over the last 4 years, we probably couldn't, with a fixed income, you couldn't adjust for that. But with these rates going up even faster than the general inflation rates, who could possibly imagine? So basically, what I'm saying to anyone that's getting ready for retirement: save all the money you possibly can. Don't stop at some point saying, I have enough. There's no such thing as enough. So for all of you, I hope that you don't need your insurance. You just pay it, and every year you send that check off, and you don't need it. And sometimes when you think you need it, maybe you really don't need it, if you get my meaning here. And I'm not telling you to do anything that's illegal or breaking the law or any contracts out there. That's not where we're going with this. I just wanted you to understand what was happening in the insurance world and give you some suggestions and some hints on how you can possibly keep your rate down. Well, thank you for coming to RetireCoast. And please go to our website and read our blog articles. We cover a lot of these topics separately in the blog articles, and that is RetireCoast.com, RetireCoast.com. Thank you.